Hello, how to complete Form 1065 for your LLC for 2021 if you do not have a revenue for 2021. So, first, on line A, principal business activity, you'll put what your business is about. And then name of the partnership, you'll put your business name, you'll put your business suite name and the city, state and zip code. Then on line D, you'll put the business identification number, and you will put on line E the date the business started. So on line C, you'll put the business code number. So how do you find the business code number? I have a video on how to choose a business activity number, and usually you'll find that on irs.gov. You can go to irs.gov and you pull instructions. You just type in the search bar Form 1065 and it will pull it out, and you will find the form. And that's how you'll find the form and save it. We do save it on nenastop.com, our blog, so that you can find the links. So I need to So when you download the form and the instructions, you'll save it so that you'll rely on the instructions quite a bit to find information that you are looking for. When you do not understand a line, you can just locate the line in the instructions and read about it. So you'll tap Form 1065. And usually it will pull it out with the form associated with it. So that's the form, you will download it and save it. That's the instructions, you will download it. And you might need the attachment B1 as well. And you will search Schedule K-1, Schedule K-1, Form 1065, and it'll pull the Schedule K-1. Schedule K-1 is what you give the partners. It's how you divide the business revenue or loss, or the business profit or loss. You flow that to the partners. From Schedule K, they'll go to Schedule K-1. So you'll download the form and the instructions to the form, and you save them as well. So let's go back to the previous one and pull the instructions. So how do you find your business activity code number when you have an LLC? You will open the form and you'll go to the end of it. It has 59 pages. Let's go to maybe 50. Code for principal business activity and principal product or services. So you can read it, and pretty much you choose the number that is related to an activity that is generating most revenue for you. That's pretty much what it is, but it's not that simple. And over time your business activities might change, but the number you chose, you just keep it, you don't change it each time your business change. So if you have a retail business and you sell online, and whatever you sell, whether is I think I'll have another video. I do have some already related to that, but if you have an online store and you sell to end users, people that will use your product. You are a retailer, and you may not have a brick and mortar store, therefore you are a non-store retailer. So you locate that non-store retailer and you choose a number there that is, best suited to your business activity, and that's what you'll go with. But you can look through and use what will work for you. And in our case, we are using a business example that has the tax preparation service, Liberman Consulting. We are using the example we are using with this LLC is using tax preparation service number. Even though the business has other activities, we keep the number that we started with. So if you have an LLC, we are just using an example here to see how we can complete Form 1065 with it. So you put your business code number. If that's your first year of filing the tax return for your business, on line J, you'll check that. So, and then you'll choose whether you're using cash or accrual. So we have cash selected. Number of Schedule K-1. Attach 1 for each person who was a partner at any time during the year. So we'll put 5 in our example. Check if Schedule C or M are attached. So we are not going to check that. And okay, so if you are going to aggregate business activities or group them, you will select. We are not going to do that. So you do not have revenue. You start the business during the year. It could be called a short tax year, but I just will file like a regular year. You do not have revenue. So it may not be the first year, or it could be the first year. So you do not have a revenue. You leave income section alone, blank. You don't put 0 there, you just leave it blank. So line 1A, gross revenue or sales, will be blank. The return will be blank. The cost of goods sold will be blank. But if you have inventory though, you'll file Form 1120S to track your inventory. So how do you file Form 1120S? I think we have an example we can use. You'll put the business name and the business EIN number, and if that's your first year, chances that your line 1 will be 0 for the inventory. Inventory at the beginning of the year will be blank, and the purchases during the year will have a number, and then your inventory at the end of the year will be the same as your purchases, and then the cost of goods sold will be 0 or blank. It will be blank. So, and you'll check line 9A, which one is to see how you are tracking your inventory, and line E is no, line F is no as well. So that's that, and the number, and you may not need it for the form because you do not have any data on the e-com section that requires it. So you can read the instructions to see if you have to attach it, because you'll attach it only when you have cost of goods sold. So when you don't have cost of goods sold, you may not need to attach it. So since your total income or loss is blank, then we'll go to deductions. So as an LLC, you won't have you won't pay salaries to the partners. That'll just be draw from it will be more like a distribution to them or something like that. So you will, but if you have employees, you'll have salaries or wages for those. And assuming that's your first year or you are still new in the business, you do not have employees, then you leave that section blank, line 9 blank. So you have line 9 11 retail repair and maintenance, you have line 14, taxes and licenses. We have 43 on that. And if that's your first year, you file with your state to have an LLC. That cost will be organizational cost and startup costs. It will be one of the two, and those will go on line 19. No, on line 20, other deduction, and you will attach a statement to show what you put on that line. And the startup costs and organizational costs, you can deduct them in full up to certain amount. Past that, you have to amortize the rest. And amortization information on form on instructions for form 4562 depreciation amortization has information on how long you'll amortize your startup costs and your organizational costs when you do not deduct the full amount the first year. And I believe it's like 180 a month or something like that. So okay, and interest will go on line 15, depreciation will go on line 16. So if that's your first year, you won't have depreciation for prior year, but for the year you are filing for, if that's your first year, you might have, you know, assets that you purchase for the business that are depreciable. Then you'll have a list of those and you'll file form 4562. Let's see if we have one. Okay. I'll have a video on how to depreciate an asset. I have one there already, multiple is there already, but I will plan of making another one so that I can explain in detail how I come up with those entry on my spreadsheet. But I'm just going to point out that, you know, you can use a spreadsheet and just track what you purchase during the year and what you pay for when you start using them, or when you have them ready to be used, whether you start using them or not. When you have them ready to be used for a business, what the percentage you are using it in the business, and the depreciation deductions. And I tend to calculate it for all the years, and then I'll print it out and save it in my long-term asset folder, so that every year I will just look at the year it is and the deduction I will take for that year, and I'll add it to the current year depreciation if there is any. So in your case, you won't have 2020 depreciation or anything like that, or prior to 2020. You will just have, you know, for the year you are filing for. So you will take 237 for the month, and that will go on your depreciation things. And depending on how you file the form, it might be a little bit off compared to your spreadsheet. So depreciation will go there, and if you report some depreciable assets, some depreciable asset related to your inventory on the inventory sheet, then you'll take it, you'll add it on line 16B, and then you'll do the subtraction on line 16C. That's why they say less depreciation reported to do subtraction. So, and they say to complete Form 4562. So an example of how you complete that: if you have multiple item assets purchase and they all fall under one asset class, you will have to depreciate them one by one. So, and then you'll have a form that will be the summary. So in that example, for example, we have a long list of depreciable assets. So pretty much every single 45cc, every single asset will go on 4562. And you can group, you can put two on one sheet because you can use the row for 7 and the row of 5, and you can put two on another sheet, and everything else is 5 years. So that means you list them one by one. So you might end up like with 15 4562 sheets, and then you will use one that will be the summary. So the one with the summary, you'll put summary, the business name, summary, your business identification number. We are now completing part 1, section 179. That's where you claim the full amount for the depreciable assets. We are now taking special deduction either. That's where part 2 is. But we are going to complete part 3 for assets placed in service during the year. So for you, if that's your first year, then you won't have anything on line 17. But if it's not your first year, let's say it's your second or third year, and you don't have any revenue, but you have assets that you have been depreciating from prior year, then you'll put it on line 17 for prior year. And then for assets you place in service during the tax year you are filing for will go on section B. So the reason why I say you might end up with 15 Form 4562 is because we didn't check bus 18 to group them. Our assets in our example fall on line 19B and line 19C. We have two assets that are in 7-year property class that will be depreciated for 7 years, and we have multiple assets that will be depreciated for 5 years. If we are grouping them, we'll group both. So we'll have just one sheet that will have all the assets that will be depreciated in 5 years, and then one sheet for, and then we'll have like one line for all the assets that will be depreciated for 5 years, and then one for the 7 years. The thing is, you only have one row for each, and then they are asking for the basis for depreciation. So if you do not group them, you have to attach supplements pretty much, and I just prefer to use 4562 to do that. Second, if you have different business activities under your main business, and then those assets are not all under one activity, then you will be careful what you are putting here. So in one example that we put together, all of our assets are retail, so we will use retail on top. We'll use retail on top, and in this example you'll notice that we do not have line 17 check here completed. We do not have anything but just a line 19 A and B, because we have for 7 year and for 5 year we put like one asset that is 7 year and one asset that is 5 year on this sheet, and then we'll have another sheet that will have, and those that you are looking at are those two, are probably those two here. Let's see if that's 40 and 33. No, probably that will be this. So that's the basis. So 22 and 24 or 27. Okay, so it shouldn't be, let me see the total, the deduction. 2.17 is the deduction. So 2, okay. So this is 22. Is 22. If I'm putting those two on that sheet, that'll be 22 and 24, and the deduction that I'm taking is 2 and 2. 2 and 2 for 2021. And they have the convention, the recovery, GDS 5 and GDS 7 half-year convention and depreciation method straight line. That's what I selected, and then I'll put them here as well. So I will have two sheets that will have two assets on them. One will be this one, the other will be this 7 and another 5, and then I will have everything one asset on the 5-year property line. So I'll have as many form of 4562 as I have assets here for 5 years classification of property. So that's pretty much for the first year. Is a little bit time consuming when you do not group activities, and I prefer not to group when you choose not to group assets, and I prefer not to group them, because when you group them and you take one off service, you will continue to deduct that amount that you group and calculate the deduction based on. But then the deduction associated with the asset you took out, you have to add it back into the business income as an income, and there is a form you have to file for, you have to complete for it. So to avoid doing that, I just prefer to take the time to add as multiple forms for 4562 to list them all. And you just do that for the first year you place an asset in service. For the following year though, you just have to put the total that you are going to deduct for that year. For instance, for 2022, the deduction for 2021 assets is just going to be this amount that I'll put on line 17. I don't need to complete those details. If I had to complete form 4562 for new assets, I'm not going to do that for the asset that I already have in 2021. You only do that for the year you place the asset in service. After that, their depreciation will go on line 17 for prior years. They'll become prior years depreciation, so you'll go on line 17. So now we are working on the summary page. So the summary page will have the total depreciation. So if you are just starting out, yours may not have line 17, may not have anything on line 17, but then you'll have all those forms for the year you place in service, which will total to 236, and here on line 22 you'll have 236 or 237. So depending on how you complete your form, when you total them, it might be a little bit different from what your spreadsheet is stating. So that's how that will be. But the summary page will have data from part 5 listed property as well. It will go on line 21, and then you'll have totals from line 12, 14, 17, 19, and 20, and 21 will be total. Yeah. And for lease property, I think we will talk about depreciation more. I'm not going to talk much about lease property, but those are assets that you can use for personal use and for business use. And one will be like camera, for instance. But if you keep it in your business location and you use 100% for business, then it's not a listed property. You can depreciate it. So that's an exception to listed properties. Okay, so and then we have amortization. So pretty much amortization, we put software there, and software outside of 197 intangible code section, and usually 197 intangible, I think they are depreciated for 180 months, but softwares are amortized for 36 months. So because the software is intangible, we put it under amortization. So pretty much you know when you start using it to know how many months you use it during that first year. So how many months you use it divided by 36 will give you the fraction that you'll time by the cost of the item, and that will give you the amortization for the year. So in our case, 1 month over 36 times 38 gave us $1.06. So it's good to use a spreadsheet to track it so that you calculate all the depreciation for all the years set up, and then you print it out and keep in your record for your business, and every year you have that to work with. So we have one for amortization. So we have the cost of the item, the date we start using it, and the session, the number of months is going to be amortized, the rate, and how we come with the rate is just the first year is 1 month divided by 36, the year 2 is 12 months divided by 36, the year 3 is 12 months divided by 36, and the year 4 is 11 months divided by 36. So 11 months for the last year and 1 month for the first year make it 12 over 36. So if you total all the rate, it should give you 100%. So the deduction is pretty much the cost times the rates, and if you total them, it will give you the cost of the items as well. That's how you know that you did your calculation right. And you just print it out, you save a digital copy and a paper copy, so that you know that those are done. And I like to have, even though I will add to my tax return the document that I use to file it, I like to have a folder for long-term assets so that I can have all the assets together, because in 2022 you might purchase assets, you will depreciate them, but then you need to remember your 2021 assets to find, you know, how much you need to deduct in 2022, for instance. So you want to have a way to keep those depreciable assets that you purchased in prior years, so that you know when you are done depreciating them. And one example, and as a new business it may not be important, but you know, as you go, as you continue, you will adjust, you know, as you continue, as you progress in your business. So depreciable asset prior to 2019, and you can see that having a set, I can tell, you know, for instance, for those assets purchased in 2015, when they will be done being depreciated. Does that make sense? So I pretty much know how much I will claim for those assets in that year and so forth. So it's good to have a way that works for you to track your depreciation, and you can track how much you are depreciating year after year as well. Okay, so let's get out of this one. And that's pretty much in brief, you know, how the depreciation and amortization form would work. So now let's go back to our form and So that's how this 236 came along. Now line 20 has other deductions. So we have 2011, but where that number came from, it will come from where you are storing your expenses. So expenses that you have but you didn't find listed under deductions, you will put them under line 20 other deductions, but then you will need to add a statement. So I like to create a spreadsheet for it, and it's easier that way. The spreadsheet will calculate the summary, but you need to have a way to track your expenses so that you will be able to deduct them. And because I'm using some numbers for Form 1065, you'll notice that you'll see Form 1120S, but I'm just using Form 1120S numbers in this example. So here on Form 1120S, other deduction is on line 19, but on Form 1065 is on line 20. So those totals, anything that you didn't have a line for on your 1065, you group them to see how much it total to. So that's 2010.40 plus the amortization is give us $2011.40. Let's go back, and that will go on line 20. So total deductions will be to total 43, 11, 82, 236, and 2011, and I believe it total to 3472. So the ordinary business income or loss will be 0 from line 8 minus line 21, and that will give you a negative number 3472, and that's your loss for the business. So pretty much, if anything else is not related to your business, you just leave them blank. And after you print the document out, you will sign and date it and make copies for your business. But while you are here, you might want to check now if you do not want IRS to discuss your business information with anyone else but you. And you are filing for your own business, you leave the prepared section alone blank. But then Schedule B, you will choose on line 1C if that's an LLC, and line 2 all the way down they have questions. So you'll read the questions, and most of them will be no, some of them might be yes. So one is yes, you want to read well to see if there is a form that you need to complete. So line 2B asks, did any individual or estate own directly or indirectly an asset of 50% or more in the profit, loss, or capital of the partnership? So if yes, attach Schedule B1. So Schedule B1, you type it in IRS website as well and pull it out. So let's see if we have Schedule B1 here. And Schedule B1 is fairly simple to complete. So you will need the partner's social security number, their name, and the ownership percentage that they have in the business. So and their country of citizenship. So first you'll put the LLC business name and the identification number on top of Schedule B1 Form 1065. Then you leave Part 1 alone because is entities owning a part of your business. If it's not related to you, you leave it alone and you go to Part 2. So Part 2 will have individual or estate owning 50% or more of the partnership. So you'll put the individual name and the partner's name, the social security number, the country of citizenship, and the ownership in the business. So we are just using that example. So in an example that you are 44%, for instance, you do not need this form. In an instance that you are the only one in the business, so you are 100%, then you will complete this form. So that's the way it works. So, and then you will just save it. And I believe there is instructions at the bottom of the form that you can read to guide you if your situation is more complex. Okay, so, and pretty much we are going just to scroll down. You read and you check no. And on line 4, does the partnership satisfy all 4 of the following? The partnership total receipts is less than 250K. The partnership total receipt is just gross sales, revenue. So like on line 1 that we left blank earlier. So the partnership total assets for the year 1 million, less than 1 million. Schedule K-1 are filed on time. The partnership is now filing Schedule M3. So if you answer yes for all of that, you don't need to complete Schedule L at the bottom of the form, Schedule M1 at the bottom of the form, Schedule M2 at the bottom of the form, item F on page 1, which will be the total assets. The total assets usually come from your balance sheet. And item L on Schedule K-1. Item L on Schedule K-1, you do not need to complete it. Okay. Excuse me. So let's go back to, and then you just scroll down and check no. Excuse me. For anything that is no. If the partnership electing out is the partnership electing out of the centralized partnership audit regime. If yes, the partnership must complete Schedule B2. If no, complete the designation of partnership representative below. Excuse me. So you'll put your name if you are the main agent for your contact agent for your business. You put your name, your address, and your phone number. If you are using a business, then you put the business information. If the business is representing your business, then that's what you do. Otherwise, you put your name, your address, and your phone number. So Schedule K. So Schedule K will be on the line 1 will be the profit or the loss from page 1, line 22. In our case, it's negative 3472. And that's pretty much what we need to complete on Schedule K, because it is an active business activities that you have. Most of your income and expenses will go on page 1, income and deduction section, and then will flow to K, and then the profit or loss will flow to Schedule K. But again, if you have other type of business activities that involve rental property, then that will be on Schedule K, not on page 1. If you have interest income, that will be on Schedule K, not on page 1. Dividend, that will be on Schedule K, not on page 1. And royalty revenue, that will be on Schedule K, not on page 1. Okay. And deduction, if you are claiming section 179 to cost out to claim deduction for all the assets you purchased during the year, the full amount, it'll go on Schedule K, now on page 1. And then that will flow to Schedule K1 for the partners. Okay, so and you can just reiterate, and if something is related to your business, yeah, you complete it. So analysis of net income or loss. So line 1, net income or loss, combine Schedule K line 1 through 11 from the results, subtract the sum of Schedule K line 12 through 13D and 21. And because we only have one number, that will just put it back here, that will be negative 3472. So now you want to break that number between the partners, whether they are active or passive. And frankly, I'm a little bit I will say I disagree with IRS instructions on how to complete analysis of net income and loss line 2. Okay, so analysis by partner type. So they say line A is for general partners and line B is for limited partners. So let's go look for the instructions. Let me see if I'll be able to pull mine. And when you do not understand something, is okay to pull the instructions and read it and see the information that is given related to the area that you want more information on. So we are working on $10.65. Okay. Instructions. Okay, so analysis of net income. Let me make it a little bit wider. Okay, so report all amounts for LLC members on the line for limited partners. So when we go back, that means it will be on line 2B. Okay, but which one of the two are you going to use? We know we are not, the partners are not corporate or partnership, or so they are individual. So we are going to, we know that that's the II or 3 I's column that we are going to fit the loss or the profit. So they give more information on it. Okay, and okay, so if the partnership principal activity is a trade or a business, classify a general partner as active. Okay, if the partner materially participated in all partnership, trade, or business activities, otherwise classify a general partner as passive. Okay, that makes sense. Okay, so so what you are looking for, because your business is a trade or a business active, you know, that's what makes like a business that require you to spend time on it. It's not passive, like investment, for instance. that's what we are talking about. So if that's what your business is, that's the only reason why you'll complete page 1 for 1065. So if the partnership principal activities is a portfolio, so that will be more passive. So that's something I still don't understand why. Classify all partners as active. So that's something I don't know why it should be active, because the portfolio is more passive. So classify a passive, that's more my concern here. Classify as passive all limited partners in a partnership whose principal activity is a trade or a business or rental activity. So at the beginning, they say to put all LLC members as limited partners. But then they say for a trade or a business, which means you spend time working, that means you are active, you materially participate in the business, just like a general partner. But you are not in a partnership, you are in an LLC. They say to put their number under passive for them. So that's something I don't think I don't know why. To me, it doesn't not look right. But again, that's what they said. So the number will go under individual passive limited partners, because that's an LLC. And I feel like it should be under active if all the partners materially participate in the business. And if maybe one participates in the business and the other didn't, then that's half here and half there. That's the way I view it. But if they say to put all partners of LLC under limited partner line and put all limited partner line under active, under individual passive, then that will be here. And I don't know why, because in that same area at the beginning they say that for each type of partner shown, enter the portion of the amount shown on line 1 that was allocated to that type of partner. And in classify partners who are individual as active or passive, the partnership should apply the rule below. In applying those rules, a partnership should classify each partner to the best of their knowledge and belief. It is assumed that in most cases, the level of a particular partner's participation in an activity will be apparent. So when they participate in the business, it should be active. I don't know why they want them to be all put under passive. So it is like there is some contradiction between one paragraph and the other, or something like that, when they should be supporting each other. But again, since that's what they have in their instructions, we will put it under individual passive, negative 3472. And that's pretty much all you need to complete for 1065. If you do not have income or revenue for that year, you leave Schedule L alone, Schedule M1 alone, Schedule M2 alone. And now that you are done with Form 1065, you will complete Schedule K. And Schedule K, oh, I think we opened it already, right? Okay, so Schedule K, you'll put your business EIN number, your business name, address, and where you are going to mail your return. You'll find it in the instructions for Form 1065, and that's pretty much that series you'll put here. And then you leave the alone because it's now public company. You put the partner, Social Security, the partner's name, address. And for an LLC, if the partners are really working in the business, you just check G, general partner or LLC member manager. So that means the LLC partners are working in the business, are managing the business. And it is a domestic partner. So you'll line H1, you'll check it, and you'll put the ownership for profit and loss for the partner. For the beginning of the year though, if that's your first time filing, the beginning will be 000, and then the ending will be the percentage that that partner own in the business. So just keep that in mind. And it just be blank or 0%, and then the ending will have whatever the partner, because you create a business that year. At the beginning you didn't have any ownership, and then at the end you have it. So, and Schedule L says to leave a blank. Schedule M, no, sorry, line M, did the partner contribute properly? No. And then you go to part 3, line 1, you look for Schedule K. And Schedule K, did we close it? Okay. We have a loss. Let's go to Schedule K to be more consistent. Did I even put down 922? Yeah. So Schedule K will have 3472 negative. Anything on Schedule K will go to Schedule K1. So